Myself Subrata Mukherjee. I request all the students to note the problem in your notebook before you proceed. Further, I request to see the playlist section of the channel to see the earlier videos that I have uploaded. Today, I will discuss a problem on cost sheet.
I am preparing the structure of the cost sheet. So the first element is opening stock of raw material, then add material purchase, freight inward, less closing stock of raw material. This will give you raw material consumed. Add direct wages and direct expenses. So this will give you prime cost. So prime cost has three components. One is raw material, second is direct wages, and third one is direct expense. We add factory overhead. Example of factory overhead like depreciation on plant machinery, indirect wages, factory lighting. With it, we add opening stock of WIP and adjust less closing WIP. So this will be added with the prime cost to arrive at factory cost. So with the factory cost, we add office and administrative overhead to arrive at cost of production. So with the cost of production, we adjust the opening stock of finished goods and closing stock of finished goods to arrive at cost of goods sold. With cost of goods sold, we add selling and distribution overhead to arrive at cost of sales. With the cost of sales, we add profit to arrive at sales value. So prime cost has three parts: direct material, direct labor, and direct overhead. With prime cost, we add factory overhead to arrive at factory cost. With the factory cost, we add office and administrative overhead to arrive at cost of production. After cost of production, we adjust the opening stock of finished goods and closing stock of finished goods to arrive at cost of goods sold. Then cost of goods sold, we add selling overhead to arrive at cost of sales, and then we add profit with cost of sales to arrive at sales value. From the books of accounts of Messrs. Aryan Enterprise, the following details have been extracted for the year ending March 31st, 2020. Stock of material opening 1,88,000, closing 2 lakh. Materials purchased during the year 8,32,000. Direct wages paid 2,38,400. Indirect wages 16,000. Salaries to administrative staff 40,000. Freight inward 32,000. Freight outward 20,000. Cash discount allowed 14,000. Bad debt written off 18,800. Repairs to plant and machinery 42,400. Rates and taxes factory 12,000. Office 6,400. Travelling expenses 12,400. Salesmen's salaries and commission 33,600. Depreciation written off plant and machinery 28,400. Furniture 2,400. Directors fees 24,000. Electricity charges 48,000. Fuel for boiler 64,000, general charges 24,800, manager's salary 48,000. The manager's time is shared between the factory and the office in the ratio of 20:80. From the above details, you are required to prepare a statement showing prime cost, factory overhead, factory cost, general overhead, and total cost. In the cost sheet, you should have proper understanding about the different type of cost and in which section we are going to place those costs. Like, what are the costs that will be added up to arrive at prime cost? Then what are the different factory overheads that will be added up to arrive at factory overhead? And Then it will be added with the prime cost to arrive at factory cost. Then office and administrative costs will be added to arrive at cost of production. So this cost classification should be clearly understood by a student. So in this question you have the first item, stock of material, the opening stock of material. You should not read the problem thrice or thrice to arrive to solve this problem. Rather you take each element. The first item is opening stock of raw material, so you write here opening stock of raw material. So obviously opening stock of raw material is a part of your prime cost. So opening stock of raw material I am writing here 1,88,000. The next item is the closing stock. So obviously I have to leave some space here and writing here less closing stock of raw material. So this is 2 lakh. The next item is material purchase. So add purchase of raw material, purchase. So this is 8,32,000. Then direct wages. So direct wages is a part of your prime cost. So I am writing leaving one line here and then writing direct wages. This is 2,38,400. The next item is indirect wages. So indirect wages is a part of your factory overhead. So you have to leave some space for this prime cost component to arrive at prime cost, and then I am writing here indirect wages. So like this you have to proceed. So indirect wages is 16,000. Here I have prepared the cost sheet. At first, the opening stock of raw material, add purchase 8,32,000, add freight inward 32,000 less closing stock of raw material 2 lakh. So this will give you cost of raw material used 8,52,000. Then we have added the direct wages 2,38,400 to arrive at prime cost. Then indirect wages, then factory overhead is added. So what are the different components of factory overhead? Let us see. Indirect wages 16,000, repairs to plant and machinery 42,400, rent, rates and taxes for factory 12,000, depreciation written off for plant and machinery 28,400, electricity charges 48,000, fuel for boiler 64,000, manager's salary 20% of 48,000, because manager's salary is distributed between the manager in factory overhead and office administration overhead in 20:80 ratio. So 9,600. So total factory overhead is 2,20,400, and it is when it is added with prime cost we get the factory cost of 13,10,800. So after getting the factory cost, we add the office and administrative overhead. So first is salaries to administrative staff 40,000, office rent, rates and taxes 6,400, depreciation and of furniture 2,400, director's fee 24,000, general charges 24,800, manager's salary 48,000, 20% of 48,000 is 38,400. So total of administrative overhead is 1,36,000 added with the factory cost of 13,10,800 to get the cost of production or cost of goods sold for 14,46,800. Then we have to add so this, since we do not have the opening stock of finished goods and closing stock of finished goods, so cost of production is equal to cost of goods sold. Then selling and distribution is added up. So freight outward 20,000, salesman salaries and commission 33,600, traveling expenses 12,400, bad debt 18,800. So bad debt is a financial cost. It can be added here, or if you want, if you can If you do not want to add it with the selling and distribution overhead, you can avoid it also. So the total value of selling and distribution overhead is 84,800. So when it is added up with the cost of goods sold, it gives the cost of sales. So cash discount allowed is not considered in this cost sheet because it is a financial cost.
You have understood the problem, and I request to subscribe my channel to get regular updates. Thank you.